Welcome to Financial Analysis in 10 minutes. So we want to look at the Microsoft financial reports from 2019 to 2023. This is their income statements. You can see it. We have 2019, 2020, 2021, 2022, 2023, and how the business has fared over time. And quickly, let's look at the key performance indicators that we want to look at in this video, which is the revenue, the Ebitda, and the net income. You can see that the revenue, this is revenue for 2023, and all amounts are in $1 million, please. All amounts are in $1 million. So, and for year 2022, this is what is being presented in this KPI. It was we had an increase for between 2022 and from their income statement, which is being, you can see that their revenue has grown over time. 2019 it was $1.5 billion, and it moved to 143, 168, 198, then to 211. So that is a very good indicator to look at whether a company is performing well or not. If the revenue is growing, it means people are interested in the products, they are interested in what the company has to offer, which means there is a demand for what they are doing. So that's a metric to look at, even though there are so many metrics, but revenue, that's why we call it top line of any income statements. Many companies, management, shareholders, they look at the revenue. Is it growing? So in this case of Microsoft, we can see that it has grown over time. From 2019 to now, it's almost double, because by the time it gets to 50 billion, it means it has doubled, which means it's a good sign that the company is growing. So now let's look at Ebitda. Ebitda simply stands for earnings before interest, tax, depreciation, and amortization. I say that again: earnings before interest, tax, depreciation, and amortization. And so what is Ebitda? And just like it sounds, and what is the importance? Is it even important at all? Why is it a key performance indicator? The first importance of Ebitda is it focuses on the core operations of the business, which means the earnings from the ordinary business activity of that organization. So it excludes non-operational activities. It excludes their investments in other short-form investments. I hope you understand. So that is why it is important. So it focuses on their core operation, on their primary activity. That's number one. Number two, investors and lenders use Ebitda as a form of due diligence in the process of evaluating the profitability of the company, of an organization. They use it to carry out their due diligence, whether to invest. They look at the Ebitda. Let's see, how has it fared over time? Is it growing? Have they been able to maintain a positive Ebitda? That's two. Number three, also the management can use it to set targets as a performance target. They can use it also to evaluate their operational efficiency. Are we efficient operationally? Because it is possible that a company may be in profits, which is the net profit. However, the profits may be as a result of their external activity, not from their core business, maybe from an investment that they ventured into. So, but Ebitda, the metric that the management can use to set performance targets and also to evaluate the operational efficiency of the organization. Then let me just say the last one. Ebitda also is a very good tool to compare companies, to do comparison across companies in the same industry. Why is this so? Because when you look at it, it excludes interest, it excludes taxes, it excludes depreciation and amortization, and anything that has to do with the capital structure of their business. So which means it's a good way to evaluate companies across board, across the same industry, rather than using the net income that their taxes are different, their interest, the finance cost is different. The depreciation, this one may be using straight line method, why this one is using the reducing balance, why another one is using some of the year digits. So, but when you look at EBITDA, it excludes all this, because all of these factors, which is the interest, tax, depreciation, and amortization, they vary from company to company. Accounting policies vary. So that is why it is also a good metric to compare across companies in the same industry. Then, so that's the importance, that's what EBITDA is, and that is the importance of EBITDA. So you can see that the EBITDA, when it comes to the EBITDA, you can see it here, it has also grown over time from 54 billion in 2019. You can see it is 102. So which means Microsoft is doing well. So looking at a company you can invest into, that you can buy their stocks or shares, then Microsoft is a good buy. And so let's quickly look at their net income. Their net income being in red here means it is only a comparison to what they have last year. Comparison. In last year, it was 72.73 billion. Why this time around it was 72.361, which is not too bad. It is, I think we have a difference of 400 million, so which is not too bad. You can see that the percentage is 0.52%. It is not even up to 1%, so it's not bad. Then finally, let's look at the earnings per share. Earnings per share, you can see the earnings per share has also grown, so this is good. It was 5.06 in 2019, but as at 2023 it has grown to 9.68. That's grown to 9.68. So which means you can see the trajectory, see the movements. So Microsoft is good. And generally, let's look at the expenses, look at the SG&A, which is the selling, general and admin expenses. Look at the research and development, the cost. They've been able to maintain their cost as well. So this visualization is majorly for the costs, while the key metrics, the key performance indicators, are the income side, while this is just to. So that is just it. Join us in the next video. We'll also be looking at another company, financial analysis in 10 minutes. If you are yet to subscribe to this channel, kindly do by clicking on the subscribe button and click on the notification bell so that you can be notified whenever we release a new video. And thank you so much. Till we meet in our next video, stay blessed.